outdated, it's antiquated, and it's not a structure for the 21st century. It needs to be modernized. We are not capturing the growth in the economy, even with an economic turnaround, even when the economy improves. We don't have a tax structure that will yield the revenue that we need to support the services that the people in Michigan need and that they expect. The League's done quite a bit of work on this, looking at what we'd like to see in a different tax structure. And we're recommending several things. Number one is a graduated income tax. All of the economic growth in the last several decades has been at the top of the economic ladder. That's where incomes are growing. And yet with our flat tax, we're not capturing the growth. We're basically not taxing the people that can afford to pay. A graduated income tax would also address some of the inequity in our tax system in terms of the tax burden that falls on the folks at the lower end. We have proposed a tax bracket scheme that basically would benefit the majority of taxpayers if that were adopted. And we understand that that has to go to the ballot and be a constitutional amendment. We also think that the sales tax should be expanded to services. Between 60 and 70% of our economic growth in Michigan is in the service sector, and yet we tax very few services. We have, that tax structure is based on a 1950s goods-producing economy. I know the legislature tackled this in 2007. They did it badly, but it was the right policy direction and it needs to be revisited. We would also like to see a comprehensive review of tax expenditures. In other words, deductions, credits, exemptions, tax loopholes, if you will, that often benefit special interests that drain an enormous amount of revenue from our state. We currently give away more revenue through tax expenditures than we take in, and the failure of tax services is a piece of that. The other area that we're looking at very carefully is the area of how we treat pensions in Michigan and the tax preferences that we give to seniors. We are an outlier compared to other states in the country, and not just by a little bit. I mean, we are way out there in terms of the tax treatment that we give pensions and we give to seniors. A married couple with pension income of $92,000 a year pays no taxes on that income. Now, I'm not saying that we eliminate those exemptions, but we can certainly lower that amount, cap it at a lower level. Public pensions are exempt completely. Seniors, double exemption when you turn 65, regardless of your income. Enormous implications when the baby boomers begin to retire in terms of the revenue drain here in Michigan, and that really needs to be looked at. Those are just in a nutshell the things that we're looking at and that we think need to be done if we're going to bring Michigan back to a healthy fiscal state.
Thank you, Sharon. How about you, Sabrina?
Can everybody hear me? Is it on?
Yeah.
Okay, so we believe that our tax structure is very uncompetitive from a business perspective, and it needs to be reformed to make our state competitive in its global economy. Thank you. Is that better?
Yes.
So Michigan is currently ranked about 27th among the states in terms of our overall business tax burden. Not the bottom of the pack, but clearly not in the top quartile either. Our goal is to make Michigan a top 10 state for business taxes. Research shows that the typical Michigan company takes on average 3 to 4% more of their profit in state and local taxes than other top 10 states across the country or other states that we typically compete with for business investment. We believe we need a business tax structure that makes our state competitive, that provides a stable and predictable environment for business, that's fair, balanced, reflects the current economy, and does not make our state's structural deficit worse. We also believe that tax reform should not be done alone. It needs to be part of a bigger, comprehensive review looking at fiscal reforms for the state, budget reforms, and tax reforms. We would agree that tax expenditures should be looked at as part of that process. Part of the discussion should also be about what our priorities are as a state for our future, what types of things we should be taking our state's money and investing in to help us for our long-term economic growth. I think I'll stop there.
Charlie Ballard.
Okay. Our levels of taxing and spending are down dramatically.
Some of that, but only a very small portion of it, is due to the poor performance of the overall economy. A slightly smaller economy means you would expect, if things kept proportional, you'd have a slightly smaller tax revenue. We have dramatically down. To give you an example, adjusting for inflation, the overall Michigan economy is down by a few percent this decade. It is. But the general fund is almost cut in half in less than 10 years. As a percentage of the economy, the state's revenues are down by the equivalent of $9 billion per year in the last decade. This disconnect occurs because all of the major sources of revenue are out of step with today's economy, as Sharon said, and so some of the things that I will say here will echo what she said. No one enjoys paying taxes, but without taxes we can't educate our children or pave our roads or provide ourselves with police and fire protection. Today the public services have been cut so far that I'm against any further explicit cuts in net revenues, and in fact I would like to stabilize our revenue system against the shrinkage that occurs as a result of this disconnection with the modern economy. In fact, I favor reducing or eliminating the Michigan business tax. It goes by the initials MBT, which might stand for monstrous business tax or mess of a business tax. I'd love to get that down, but given our budgetary situation, I'm unwilling to advocate doing that unless we can make up the revenues someplace else. And then the question is, where do we come up with those revenues? And there are lots of possibilities, and I think we will talk about a whole lot of them this afternoon. The antiquated sales tax for me is at the top of the list. It's unfair and inefficient to have a tax on some things and no tax on all the services and entertainments that we don't tax. Since services and entertainments have grown more rapidly than the rest of the economy, that means that the sales tax is collecting an ever-shrinking portion of the economy, which makes it more difficult to fund public services. There simply are no sensible arguments in favor of the current system. We should extend the sales tax to services and entertainments, period. No one starting from scratch would ever consider a system where you pay 6% on a hammer at the hardware store and 0% on taking Fifi to the pet grooming salon. The other possible source is the income tax. As Sharon said, in the last 35 years, we've had a historically unprecedented increase in income inequality. In Michigan, as in most of the rest of the country, the ability to pay taxes has dramatically concentrated at the top. Many CEOs, doctors, lawyers, and yes, economics professors have done very well. The ability, and that's why I'm in favor of a graduated income tax, which would distribute taxes more fairly. If we're unwilling to do that, I would still be in favor of taking a look at the flat rate. We could raise it from its current 4.35 to 5%. I like to use 5% because that's the rate that they use in a flat rate in Utah, not known as a hotbed of left-wing radicalism. And indeed, if we were to increase our income tax, much of the additional revenue would be effectively paid by people in other states. Because if a Michigan resident itemizes his or her federal income tax, you can deduct the state and local income taxes from your federal return, and so whenever I pay $1 of income tax to Lansing, it only costs me 75 cents because I get a quarter back from the feds.